All right. Good morning, traders, and welcome to the opening bell. Today is Tuesday, June 2nd, 2026, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's a quiet morning. We're still getting some ongoing commentary with regards to the negotiations with Iran. Doesn't look like there's any progress being made. In fact, there's an argument to be made based on some of the commentary coming out both from Iran and the administration that they're kind of reaching a stalemate here as far as the negotiations are concerned. So look, the markets are taking this in stride. We're a little bit slightly off on equity indices. The US dollar is pretty much stable. Gold's a little bit higher. Oil's a little bit lower. But there's not much clear-cut plays in on the menu right now. We'll take a look at all the US dollar crosses: euro, sterling, Aussie, CAD, yen, gold, oil, and the biggest market mover of the day, oddly enough, is Bitcoin, breaking big support, and looks like there's some further downside pressure there. Any other questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a moment. All right, good morning, everyone. Ashish, Dan's in the house. Ken, good morning. Latanya, great to see you as well. Mesfin, Mohammed, Pamela, Patricia, Seth. Not going to get to everyone, but great to see you guys this morning. Here's the DXY. Really tight weekly opening range right above the monthly open, right above the weekly open, right above last week's low, skirting that Friday drop at 98.95. That's initial support. Key resistance doesn't change. 99.50. We've been talking about that all month long. It's the 618 from the high. It's the January high. We capped that on the advance last month. That's the major resistance break you need to mark uptrend resumption. Now, if the dollar is going to head lower, or if we're not going to make that break, that's key resistance. Initial support 98.95. The break the bears would need to assert, okay, to get the pullback in the dollar is 98.68, 98.58. The objective 200-day moving average, the May low, the August high day close, right there. That's the break that would need to fuel and suggest we have a near-term corrective action that would basically invalidate the May uptrend, okay? So all things held constant, the DXY is in a really tight weekly opening range, just above near-term support, just below, key resistance, looking for a break here. Now you have ADP on tap tomorrow. We do get job JOLTS openings, which is going to be out later today. It's kind of a precursor, but ADP is going to be the private sector payroll, and then non-farm payrolls on Friday are going to be the heavy hitters here for the US dollar crosses. Obviously, the Iran story is going to be ongoing, but from where we are in a technical standpoint, just below resistance, still holding the uptrend. Here's euro dollar. Similar scenario, just above support, which is 1578 into 1598. That's the same level we've been talking about for a couple of weeks. 618 off the low, January low close. Last week, a lower parallel was right there, caught the lows. Here's euro into the start of the week, okay? Your weekly open resistance is 1560 by 1680, okay? If we're heading lower on the euro on this stretch, I want to see 1680 hold. You need to see a break below 1578 to mark resumption. That's kind of the way I'm approaching this right now. This is what I want to see hold if we're heading lower, but proper bearish invalidation still needs to be at the yearly open, at last month's open, at that 618. It's still 1745. It's a ways away from where we are right now. It's almost 100 pips. It is 100 pips. So from a positioning standpoint, not sure there's anything necessarily appealing right now here at euro, but that's kind of the broader scheme of things where we are right now. Here's the daily chart, right? Big zone, 200-day moving average, 38.2 retracement. That's resistance, key support. Look for a breakout here. You did get some Eurozone CPI figures in over earlier today. Came in line with expectations. Core came in at 2.5%, which is slightly higher than the 2.4% expected. That's basically solidifying an interest rate hike next week from the ECB. That's priced in, guys, at like 98%. So even if we do get the hike, that's not going to be justification or causation for necessarily euro strength. But that is pretty much priced in right now for a potential hike next week. Questions on euro? See if we can't get a decent range breakout here over the next couple of days. Here's the British pound. I'm currently in production of writing a piece on this. We'll be out at 12 o'clock today. Kind of did a rework a little bit on the near-term charts, but Recall where we are, okay? This has been one of the trades that hasn't been our favorite setups for the last couple of, I want to say weeks, just because, not really just last week, ever since that outside day reversal off the lows, which came right off slope support, and then a false break of the yearly open and take back, it's kind of been a little bit of a mess. Look, 34.74 is still significant. That's the objective yearly open, not Mike Boutros' opinion, not FOREX.com's opinion. Fact. The February low day close extends that to 34.65, 10 pip zone, a pivotal price action all year long. We're there right now. Okay, drill down deeper. Here's the 4-hour chart. If the British pound is heading higher on this stretch, losses would need to be limited to that lower parallel. The 618, which was a false break last week, that was 34.50. That's bullish invalidation. If 34.50 breaks, that would invalidate the uptrend from late March, and that would suggest that a deeper correction, a deeper sort of resumptive move from the January downtrend is underway. So that's the key support. If we crack this level, resistance at 35.25, the big zone is 35.70, 35.98. Okay, 100 off the low, 618 off the high. Favorite fib confluences. Both of those converge on the median line. Let me zoom this out for you. This is high, low, high, right? Median line inflection, 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 break. That converges on 35.71, 35.98 over the next few days. So the levels are well mapped out. We just need momentum to kind of give us a pump here. And hopefully a decent range break for the week would give us a little bit of a play. You're pretty limited. You have a couple of commentaries from the BOE, but pretty limited as far as data is concerned out of the UK this week. We're going to be looking for the dollar to really be driving this one. So sterling, as it stands right now into the open of US trade, yes, we are testing near-term resistance at the objective yearly open. Look for possible inflection here today. Iman says, good morning. Amazing gold setup as always, not only in gold, but in all. Cheers, Iman. Always great to see you. Happy Tuesday. Okay, any questions on the British pound? Moving right along. Here's Aussie. Patience is required. Patience is required on this one. I still like this setup. It's just that, again, the momentum is just completely waning for the last week. Remember, last month, we rebounded off of the median line of a multi-month uptrend. This is from August and November. Median line resistance, break, median line break, break, support, support, support. We're right there. Key resistance is 72. That's been well defined. That's on the weekly charts as well. 72 is 100 off the low, 618 off the high from 2021. Major pivot in price. That's resistance. And we're sitting on slope support. You would need a close below 71 to suggest a more significant correction is underway within the uptrend. 71 is the 38.2 of the March rally that caught the lows last month on a closed basis, was literally the close low for the month. That's the break that would open up the potential for a larger setback in Aussie. Till that happens, you're just right below resistance. And hopefully the weekly and monthly opening range give us a break. Here's your monthly open, your weekly open, last week's initial swing high before Friday, that's 71.85. We talked about that yesterday. Here's key resistance at 72. Need to break 71 to suggest that corrective action still has more to go. Initial resistance, 71.85. Bearish invalidation, 72.13. Key support, 71.08. That is Aussie dollar. No data on tap this week from Australia. Dollar CAD, here's what Loonie looks like. So we are pulling back. Remember, we talked about this into the start of the week. Was this just a test of uptrend support last week, or was this a larger breakdown? Remember, that outside day reversal range still exists from Thursday. So I'm still looking for a breakout of Thursday's candle for guidance. We are constructive above 37.25, 37.33. That's key support. Next level up, you got 38.77 to 786, but the big region is right into the 39.15, 39.40 area up here. If dollar CAD is heading higher, and this one's an easy set because we're pretty close to support. If dollar CAD's heading higher, we would need to hold 37.95. If we close below 37.95, that's a close below the objective monthly open. Trend line support off the lows from May there, and it would buckle back below the 200-day moving average. So really nice conviction, at least, that this is a very nice, important, significant pivot zone. Resistance 38.77, key resistance 39, bullish invalidation 37.33 into 37.25. No changes on the dollar CAD setup. Remember, dollar CAD has that double whammy jobs Friday where you get NFPs and Canada employment released at the same time, 8:30 Eastern. Dan saying on Aussie, 72 seems like resistance as former support. Would you identify a head and shoulders formation on Aussie on the 4-hour chart? Let me take a see what you're looking at here. Okay. Seems like 72 is, yes. So 72, yeah, you're on point with that, Dan. 72 is massive every single way you slice it. In fact, 72 proper was last month's objective open. 72.13 is that 100, and the 618 72.08. So that whole region absolutely is going to be a major inflection zone. Head and shoulders. My problem, Dan, and you've been with me for a while, man. My issue with the head and shoulders formation in general is that it holds no merit until the neckline breaks. And I know that seems like kind of a cop-out, like bull answer, but Dan, that's the extent of it. I can't tell you how many times I've seen traders, oh, it's a head and shoulders, oh, it's a head and shoulders, and they start to make extreme position assumptions based on the head and shoulders formation. Nothing matters until the neckline breaks. Okay? All the head and shoulders formation is a test of a new high and a failure and a rebound. Until the neckline breaks, it's nothing. So Dan, I'm not picking on you, brother, but I'm just saying, if the neckline were to break here, then we start to talk about the head and shoulders. And what's the main benefit in identifying a head and shoulders? It's to get the measured move for the target. That's the whole point, is that the length of the shoulder length should be the length of the decline once we break the neckline. So the point of identifying the head and shoulders is being able to identify and calculate a limit, but nothing is going to be in play until that neckline breaks. So Dan, for my part, I don't tend to look for a head and shoulders. I tend to look for just neckline breaks, because that's when the formation actually is feasible. That's when it's going to bear fruit. Otherwise, every time you see a high and a bounce, you're going to be like, oh my gosh, that's a head and shoulders. So that's my only problem with that. 71 break, I'd be comfortable calling that potentially a neckline break. So Dan, it's not that we don't want to identify those when we see them. It's we want to put them in their right place in trade. So 72, so 71.08 support anyway. If we break that low, would be a decent signal, at least for a potential break of a neckline for this formation. And then you get the measured move, which will come down near 70, by the way, if you do get that head and shoulders break. Dan, does that help? Just give you some background information on how I perceive those formations. It says helpful feedback. Thanks. More than welcome, sir. More than welcome. All right. Head and shoulders specifically is the one that I tend to be a little bit more reserved on. Wedge formations, triangle formations, these kind of things are a lot easier and can be more fruitful in being able to identify early. But the head and shoulders specifically, it's the neckline break is the only thing that matters on that. Okay. That's Aussie dollar. Dollar yen. So dollar yen is just crawling higher. It's not a conviction breakout, but it is a break of resistance. So remember, 59.50 was the line in the sand. That's a 786 retracement of the decline off the yearly high. That was the close high last month, okay? And that was also the initial resistance that we were looking for. So we came into it, we pushed through and closed above it yesterday. So technically, it is a breakout. Momentum, more to be desired. We want to see a 60 break here with some fervor to the upside. That would be the highest momentum read we've gotten since March if we do get it. But my problem here is like, what's the setup? You know what I mean? I'm not in the business of buying at the highs with major resistance overhead. So take it for what it's worth, guys. 59.50. Listen, the objective weekly open, the monthly open comes in at 59.27. That converges on the median line. If dollar yen is heading higher, I'd want to see that hold Topside level 60.21, 60.73 all day long. That's what caught the yearly highs. That's the 2024 high week close and the 2024 April high. Both of those converge on uptrend resistance over the next couple of days. So intervention threat's going to continue to rise. I'm sure you'll start getting some commentary from the BOJ or Japanese officials, over the next couple of days here as we tempt the resolve of those officials near the highs. Remember, the major concern with them is usually the speed of the move. So this has kind of been a low-hanging, slow drag higher. So we'll see if any commentary starts to come into focus here. But 60.21, 60.73 is major resistance. All right, that's dollar yen. Gold. So here is gold. Yesterday we said, hey, if the gold breakout is legit, we want to see support at the 618 retracement. What was that? Was that a hold? I'd count that as a hold. Little bit of a slide below, but a quick reversal took us right back above, and we're right back in that key zone. So this is it for gold, guys. This is absolutely critical. I'm going to take you back to the weekly charts just one more time to show you the same argument that we made yesterday. The notion that a more significant low may be in place is all premised on this region right here, 44.92 into 45.33. That's last year's high close. That's this year's low week close. And there's also a retracement in there as well. But the point being, that's key. Multiple intra-week drops, no closes. We're sitting at support. So the focus was the fact that last week's drop came into big support, 100 off the high, 618 off the low, 200-day moving average, the low day close for the year. Really strong reaction. Took us right back into that key pivot zone at 44.92, 45.33. We're trading there now. The monthly open is right there as well. The actual monthly open comes in at 30. Is it 37? It's 40, 45.40. So this whole zone is absolutely critical. Drill down deeper. Here's the 4-hour chart. They have a weekly opening range set right above that 618 retracement. Look for this range breakout. Strength and a close. Let's call it the monthly open. Okay, 45.33 is the high day close, but let's call 45.40. That's now the weekly and monthly range high. If we close 45.40 on a close basis higher, that would suggest a more significant low is registered here. Below 45.54, we're neutral. Sub 43.83, we're bearish, okay? If you break this key zone, you got the yearly open 43.19, you got 42.24, it's 100 off the high. 2 levels of interest if that support zone breaks. But all things held constant, the focus is what happens right here today. Questions on gold? All right. Oil, not really much to update here. We are still trading at the 90, 79, 91, 80 level, this zone that we were looking at. We've been straddling it for the last 5 days. I don't really think there's much merit into spending much time on the analysis here, guys. Too much on oil, just because it's 100% headline driven right now. Comments of a negotiation, oil drops, negotiations fall through, oil rallies, quiet period where there's not any commentary from either sides. This is what you get. So we'll continue to track that one. The only thing I have conviction on here is 85 is key support. Absolutely critical. The high day close for the year, the low close from April, that converges on slope support. Anything above 101, 101.50, again, you start to run into panic buying potentially for oil. So we'll keep our eyes on that one. Last but not least, here is Bitcoin. So you guys have all been hearing this from me for the last couple of days. 74,434 into 76,159 was huge. That was last month's opening range low, the 2025 low close, and the 2025 low. Major pivot in price. We came off of uptrend resistance on a failed attempt to break higher. We dropped into that support. We said, hey, if we break this level, sayonara, look for slope support. The last line in the sand is 70,283 into 70,531. That's the low day close for the year. That's the low week close for the year. We're breaking through that now. So what this suggests is that Bitcoin does, in fact, still have a potential new low to come into play before quote unquote crypto winter is over. So that brings into focus, guys, once again, some key levels. Okay. Near term targets. The March low day close is 65,954. Converges on former slope resistance. That might be the first sort of zone to look for. This year's low close is 62,795. The big zones of support that we were talking about since December when we wrote the trade of the year, the two levels that I highlighted in that report, guys, was 57,885 into 58,725. That's the August 2024 low week close and the 618 retracement of the entire 2022 rally. Converges on the 2023 trend line, one touch, two touch. That's right there. It's only a two touch, so we don't want to stress it too much. And downtrend support. So that's the risk. That's the risk for Bitcoin. Watch today's close. Southbound of 70,283. The pressure is on for further losses. Here's our RSI dropping sub 30 for the first time since February. Actually, since January 30th. You can see after we broke 30 in momentum, that was the bulk of that decline, another 24%. I'm not saying that's what's going to happen again, but I'm saying oversold condition in Bitcoin, an asset like this, that's when the market has the most downside pressure. You don't want to get cute here. So Bitcoin does look like there is further pain to come in the days ahead. While below 70,531, the threat is for further losses here on the crypto block. Questions on Bitcoin? All right. Well, if there are no other questions, guys, we'll go ahead and wrap it up here. It's a quiet session in the U.S. Keep your eyes on the headlines. I'll keep you updated on MB Forex as always. If anything comes out from the president or any news comes out with regards to developments in Iran. The data dump starts tomorrow with the ADP report. That's the private sector employment. We're expecting a print of about 85. No, what's ADP supposed to come in? 117. 117 on ADP tomorrow, previously 109. Okay, and then we also get some ISM data tomorrow, but non-farm payrolls on Friday is going to be the heavy hitter. We'll keep you updated as always on X. Till then, best of luck trading, guys, and I will see you tomorrow morning. God bless.